What's up everybody? Nate here. So for the first time in American history, household wealth was over $150 trillion. That pretty much means that right now, Americans have more money than they ever have in American history. And that could eventually lead to a variety of things, like more spending or possibly more investing and even bigger savings accounts in 2022. But this is not exactly all sunshine and rainbows, because at the same time, US debt is also growing at its fastest rate, meaning Americans are earning more and getting more money, but they're also spending and borrowing more. So today, I want to talk all about the $150 trillion in household wealth that Americans have right now. We're gonna go over exactly how Americans got this wealth in the first place and what this is all going to mean for our economy in the future. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about wealth in the United States. So as of the fourth quarter 2021, household wealth went over $150 trillion. That is up by over 8.2% when compared to the previous quarter, and it's now grown at its fastest rate since the first quarter of 2020. And from January 2021 to January 2022, it increased by around 14.4%. So right now in the US, Americans are generally wealthier than they pretty much ever have been. That means they now have more money to go out and spend, which in general is pretty good for our economy. However, because of inflation and prices going up, they're gonna need that extra cash. In February 2022, inflation hit a new over 40-year high of around 7.9%. What that means is that something that cost you around $1 last year would now cost you around $1.07 or 8 cents. That is a pretty big jump in just over a year, and it's caused a lot of Americans to go into debt because things cost way too much right now. Non-financial debt in the United States hit a new record high of around $65 trillion. Household debt came in at around $17.9 trillion. Business debt was around $18.6, and finally, $28.6 trillion was from the government. Now to break that down into numbers that actually matter to the everyday American, let's talk about those household debt numbers. Household debt is growing. It went up by around 8% from the beginning of 2021 till right now. 6.9% of that was in credit card debt, and around 8% was just through mortgages. And the bigger question is right now, are Americans going to continue to get wealthier, or are we starting to see that wealth disappear? Well, to answer that question, you need to kind of figure out where all of this wealth came from in the first place. And to do that, we're gonna break things down into three main categories: the stock market, the housing market, and inflation. So let's start with number one, the stock market. In 2020 and in 2021, the stock market saw new record highs pretty much all the time. This came after one of the fastest stock market crashes that we've seen pretty much in its history. The pandemic scared a lot of investors off, and most of them ended up selling their assets because they didn't know what was going to happen next. They'd rather hold on to cash or other assets through the crash because they weren't sure how our economy was going to survive. Businesses were closed down for the foreseeable future, which meant people couldn't work, and if people aren't working, then nobody is going to get paid. With nobody getting paid, our economy pretty much crashes. So investors were pulling their money from the stock market because stocks are from publicly traded companies, and these are some of the biggest corporations in the United States. But not to worry, the rescue team came in the form of economic stimulus and bills from the federal government. In fact, over the last 2 years, the United States has printed trillions of dollars. And some estimates say that around 80% of all US dollars that are in circulation were printed over the last few years. That's a lot of money. Now, the first thing that immediately did was increase inflation. And we'll get into inflation a little bit later, but when inflation and money printing happens in our economy, the stock market and asset prices typically start to go up. The reason for this is because Americans tend to put their money into assets that are going to gain money instead of just holding on to dollars that are going to start losing value because of inflation. As more money is printed, that means that demand in our society starts to go go up. People have more money, which means they can spend more. But as they continue to spend and buy more things, businesses just can't keep up. They have to start increasing their production, which means hiring more people and building more factories. None of that is free, so the businesses end up taking on that cost initially, but then they trickle down the remaining costs to the consumer. That's why you start to see prices going up as more people have money, which is basically just a byproduct of inflation. But then you have some Americans that put their money into assets like stocks. In theory, investing in stocks over time will beat inflation because their percentage of appreciation is going to be way higher than inflation. And for the most part, that has been true. So Americans started to pour millions, if not billions, and trillions of dollars into the stock market over the last couple of years. And because of all of this economic stimulus that was given to Americans and to the stock market, well, that pushed up things even further. Americans basically just took all of the stimulus money and poured it into the New York Stock Exchange, pushing up all of those assets even further. So that made Americans pretty wealthy over the last 2 years. Number two, we got to talk about the housing market. So with all of that money being printed, there was one other thing that the United States federal government and Federal Reserve decided to do. All the way back when the pandemic started, the Federal Reserve dropped its benchmark interest rates down to nearly 0%. This made it so that anybody could spend money pretty easily. You could go out and get a loan and essentially save hundreds of dollars a month, if not hundreds of thousands of dollars over the lifetime of your loan because interest rates were so low. So as you can probably guess, and like we saw, millions of people went out and got a mortgage and bought a house. That kind of led to a housing market that now has low inventory and prices that are way out of control. But with so many people taking this stimulus money and putting it into a house and then saving money because interest rates are so low, well, you essentially had a housing market boom. And current home owners are now seeing all of the benefits of that. They have gained so much equity in their house because the housing market around them, even if they haven't sold their house, is exploding. Home values have gone up around 20 to 30% over the last 2.5 years, which is insane because they usually only go up around 2 to maybe 5% every year. And equity is basically just the difference between what you owe on your house and what you've already paid off. And in 2022, Americans are equity rich with their homes. They basically have all of this money, which means they have increased wealth because if they were to sell their house, they could make a huge profit. I will say that's not guaranteed to continue. The Federal Reserve is stepping in by raising its interest rates in 2022, and they've pretty much stopped all of their economic stimulus at this point. But in the same breath, we're not really sure if housing prices are going to significantly drop anytime soon. So Americans have gained all of that wealth in the meantime. And then number three, we've got to talk about inflation. Inflation has pretty much been the dominant story in the business and financial world for the past 1.5 years now. I mentioned it before, but inflation is starting to reach new record highs, and it's only gone up every single month since pretty much March of 2020. Now, my main point here is that even though Americans are starting to become even wealthier because of their homes and all of their appreciating assets, inflation is starting to eat away at that. If the price of things continues to go up rapidly in the United States, then Americans are going to have to spend a lot more for just about everything. The buying power of all of that money starts to decrease. You now need a lot more money to buy all of the same things. So your wealth isn't as high, and that ultimately scares people in the housing market and investors on Wall Street. If inflation continues to get out of control, then people are naturally going to spend less money. They're not going to have as much money, or they won't have the willpower to spend because things cost way too much. They gotta have money for their necessities too, so if they don't have much extra money, then businesses are going to get hurt. That extra consumer spending is pretty much how all of our major corporations function. And the same could be said for the housing market, because if people don't have that extra $1,000, $10,000, or $20,000 to put down on a home, well, they're not going to buy that house. Both of those two things equal a lower stock market and a lower housing market in 2022. Now, of course, there is a ton of other factors here, but if we just talk about inflation inflation affecting them, we could see some drops. What this is ultimately leading to is Americans going a little bit further into debt because everything costs so much right now. They're starting to put things back on credit cards because they just don't have the funds in their bank account. That is going to be pretty expensive considering the Federal Reserve is starting to raise its benchmark interest rates up from 0%. Those credit cards have adjustable interest rates, which means those are going to go up, and that debt is getting more expensive. The housing market is in a little bit of a different situation because you have adjustable rates, then you also have fixed rates. So fixed rates are not going to increase over the lifetime of that loan. However, adjustable rates are starting to go up, and millions of Americans have adjustable rate mortgages, which means that mortgage debt is going to be a lot harder to pay off. So what exactly does this all mean for the future of our economy in 2022? Well, we can most likely expect inflation to continue to rise in 2022 and beyond. I mean, the Federal Reserve and the United States government is never going to stop printing money. I mean, that's what they do. More than likely, they won't print as much money as they have over the last 2 years, but who really knows? I mean, if we have another pandemic crisis or an even bigger crisis 5 years or 10 years down the road, they're probably going to need to print way more money than we even saw in 2020 and in 2021. That could mean inflation continues to rise. Most experts believe that it is going to slow down over the next year or two, but in the meantime, that could mean debt goes up in the United States. Americans just don't have all of the money they need to buy things right now, so they're starting to lean on that credit as a way out. As for the stock market and the housing market, the stock market is in a slump as of March 2022. Most experts believe that that's going to be short-lived, and it's mainly due to the Ukraine-Russia war right now. And historically, the stock market has always gone back up. I mean, you can look at the 3 major indexes for this fact. So you'll probably continue to see wealth there, and you'll probably continue to see wealth for average Americans in the housing market. While housing prices will most likely level out in 2022 or in 2023, they won't exactly go way back down in prices. Unless we see an all-out crash, housing prices are going to stay right around where they're at right now. Big difference that we'll see there is they probably won't appreciate in value as Americans just have less money. And again, that is all due to inflation. So yeah, while Americans' wealth has reached an all-time record high, realistically, they're going to continue to need more money because everything is starting to go up. But now I want to hear from you on this issue. What do you think about household wealth in America hitting $150 trillion for the first time ever? Do you think this number is likely to continue going up, or do you see household wealth actually decreasing in 2022 and beyond? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out videos every single day over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.